Sun Pharma, of course, the bellwether of the pharma company, has declared numbers, and the revenues have actually declined by about 10%. Now, the estimate was that the revenue would actually decline, but not so much. It was largely close to 7,900 what the street was anticipating, but they have delivered 7,500 crores. It was on the expected lines, because Taro, which is a significant part of this top line, actually declared numbers a couple of days back, which was a miss, and that was on the expected lines. The majority controls the US business of Sun Pharma. Now, when we talk about the US business, or what has happened in the quarter, so the US business, or the finished dosage US business, as Sun Pharma calls it, went down by about 33%. There was expectation that it would decline by about 10 to 11%. So actually they only managed to do about $283 to $285 million versus estimates of about $300 million for this quarter. Now, they have blamed it as far as the COVID issue is concerned. We'll also wait for the specialty business and really what comes in, but it's specialty that the street is looking for, and what is the growth over there. Now, when we talk about the India business, that's where the surprise came in. So 4% was a decline number that was expected, but they actually grew by about 5%, and that was a key positive. Rest of the market, emerging market, rest of the world also did decent. There was no particular complaint, but that as a portion of its percentage of sales is not quite significant. The good thing is that the margins of the company actually came in higher than estimated. So it came in much higher than 20%. The street was going in with a number of 19.5 to about 20%, but the percentage margin actually came in much higher. R&D spend came at 5.6% of the sales. Last year, same time, it was 5.1% of the sales. So on a percentage revenue term, R&D spend still continues to be on a higher side. Other expenditure actually fell by 20%, and that was the key differentiator which actually led to the margins being higher. We don't have the exact details as to what are the other expenditure that led to this move, but definitely that was margins, first the gross margins, and then of course the EBITDA margins that was higher than what the street was anticipating. Now, when we talk about really what's happening in the specialty portfolio, that will be the key thing to watch out for when Mr. Dilip Shanghvi would actually give details of their numbers. But Dilip Shanghvi in the press release has given a quote where he said that Q1 numbers, of course, were impacted by the COVID and various lockdown across the world, across various cities in the world, but they still managed to do a decent job, and that shows the underlying strength of the business. That's essentially what he has said. Now, we have to look at these numbers in context with some of the other pharma companies which have declared so far. However, as of now, this seems to be one of the weakest number among the lot that has come in. A lot of companies are yet to report, but still, this seems to be one of the weakest top line growth. But at the same time, the trend which was seen in some of the other players, where margins were much higher, even though the sales was particularly not a very big beat, is something which even Sun Pharma has maintained. R&D spend, probably one would say, is in line with estimate, because people thought that R&D spend is something which can be tweeted along, and that could lead to the margins being higher. But R&D spend coming in at 5.6% of the sales also look into decent. When the management will speak, we'll wait out for the commentary on the US business, especially the specialty market, and what are their plans for the high growing Indian formulation business, which actually has surprised the street in Q1.